welcome back for part 2 of your weekend review. We just finished looking at the SPY weekly. Um, One thing I want to note before we move on from the weekly is the low volume we saw. We did have a bullish week last week and the week before, but volume has been decreasing, as you can see by this little trend going on here. As we dropped hard, volume was picking up big time. That's telling me that this does look very toppy here after such a huge up leg or an uptrend. We are running out of steam for sure, but everyone knows that it's just a matter of what is going to send us over the edge here. Let's look at the monthly of SPY. I need to draw this trend line in here. Right there. Okay, sorry for all this noise down here, but you can sort of see where this trend line is ending up. We have resistance, resistance, dropped, came back up, had resistance last month, and right now we are above that resistance. That is very bullish. If we can close up here for the month, especially if we can close above the 111 area, if we can close above that huge resistance at 110 on SPY, that would be incredibly bullish, and it's some upside potential there to the 120 mark, and then 130 is the next target from there. However, if we do come back down the last 2 weeks of this month, we will be under the trend line still, and that will be bearish because we will be finding resistance, and it'll be the start of a rollover formation, especially if we can close the month below 102, the 102 area on SPY. That would be very, very bearish. That's not what I wanted to look at. Let's look at the IWM, the Russells. The Russells, I just want to look at the daily chart on these. The Russells have been very, very relatively weak compared to the SPY. Here's the SPY daily chart where you see this uptrend, higher highs, higher lows, swing highs and swing lows, that is. And you look at the Russells, and you have this double top formation confirmed after we broke down under this neckline of sorts, or this the middle of the double top. It was confirmed. However, we found support at these previous swing lows, and now we have another swing high. So it's a lower swing high. The Russells are rolling over for sure. So that is something to note because they are leaders. Also, the XLF, the financials, are relatively weak to spiders as well, making a lower swing high, and that also looks like it's a rolling over formation. We need to get confirmed breakdowns, however, below some big support areas on the Russells and the financials in order to confirm a downtrend. So we'll see how that goes. Keep that in mind because those are leaders. Real quick, this is the Russell's 1000 financials, so it's Russells and financials, basically small cap banks, also showing relative weakness. So, as everyone in the market knows, the markets are way overbought. However, stocks can do whatever they want. We can find a bullish formation here, some ascending triangle formation or a high base, and it can break out hard to the upside. So don't trade based on what you think should happen. Trade on what is happening, because honestly, everyone knows that the markets should not be this high, that this is a bear market rally. The fundamentals just aren't that good. We can't have a jobless recovery, and I don't want to go into fundamentals too much, but you got to trade on the technicals despite the fundamentals, because the technicals tell you what's happening. The fundamentals tell you what should happen, and often the market does not do what it should do. So that's all for the weekend review. Thanks for being a part of SwingHigh.com.